My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. Hey, have you ever thought that the banks are just a gigantic pain in the butt to deal with? Is there another option? Is there another way to get capital for your deals? Well, hey, today, zooming in from beautiful Colorado, just down the Rockies from us, we've got Kevin Amolsch, who is a very experienced real estate entrepreneur. He's also got a ton of experience in banking, and these days, and for the last quite a while, he's been helping other real estate investors get financing because he does, well, more than just private lending. He's got his own capital side of things. So Kevin, welcome to the show. Great to have you.
Dave, thank you so much for having me. I'm excited to be here.
I'm excited as well. So Kevin, let's start things off with just give us a big picture overview. What do your different real estate what your real estate businesses look like today, August 2024?
What do the businesses look like? Well,
yeah, because you're an active investor plus you're lending money. So kind of give us a snapshot. What does the whole umbrella look like?
Yeah, and I know we got a limited amount of time here, Dave, but I'm going to take you back quick, back to 2001 when I bought my very first house. So I bought the house. I was just turning 21, lived in it for a little while, moved out and started renting it out. And what I learned is there's a lot of ways to make money in real estate. And even if you just have a simple rental property, it's going to have multiple ways of profiting from that one property. So I knew then that I wanted to make real estate the vehicle to make me rich. Yeah. So I really started focusing in on that and buying a house, 2 houses a month while in college, while working a part-time job. And you could do that without cash and credit if you could get creative. So I was meeting with owners, we call it belly to belly selling back in the day. We don't do so much of that after COVID, but we would get in the living room and just have a conversation and see how I could solve a real estate problem. Yep. Well, I learned through all that process that my passion really is on the financing side of the business. The financing is everything. It's how you make your offer. It's how you structure it. It's the words you use when you're negotiating. Mm-hmm. So the deal structure is the money. So I focused in on that and started raising private capital to lend out to other investors to help them with their projects. So today, to come back to your question, I still do investing on my own, although it's not the creative like I was doing back then because that takes a lot of time. Yeah. Now it's more what comes to me. I hate to say it that way, but as you go through your career, things do start coming to you. It becomes a little easier. And then I'm highly focused on Pine Financial and helping other real estate investors reach their goals.
Cool. So tell us a little bit about Pine Financial and who you work with and who you're typically financing. And then we talked a little bit off camera before we started about different creative ways that you help, or people that are doing creative deals, how you help them get financing as well.
Yeah. So Pine Financial is a private lender. We used to call them hard money lenders back in the day, but the industry doesn't like that so much. I still call it that.
hard money lenders don't like that so much.
But yeah, it's a private money lender. So the difference between that and a bank, let's say, is when you're a private lender, you don't have the FDIC and you don't have the RESPA and the TILA and all these government guidelines. In fact, in many states, Dave, you don't even have to be licensed to be a hard or a private money lender. Wow. So it's sort of like the Wild West still. And the good thing about that is I call it common sense underwriting. Look, I don't have to fit into your little box or have a computer tell me if you're approved or not. I could actually unwrap that thing and see if it makes sense for us to get involved. Like, do you have a plan to pay me back? Sure, then let's talk about it. Let's see, how do we get this loan approved? So we're looking for ways to say yes, not to say no. And that's really the difference between banks and private lenders. So we help real estate investors get creative, like you said. So here, an example would be a cross-collateralization. So if you haven't heard of that, it's just bringing in additional properties to help satisfy a requirement. So let's say you need some money in the bank to qualify, or you need a down payment or something, but you don't quite have that, but you have a property over here that has equity in it. Well, why don't we just wrap those together and get the deal done on the subject property that you're looking at? So it's a pretty simple concept, but cross-collateralization is something a lot of people don't think about, and it's a creative way to get deals done.
Plus, you don't have to go through the whole thing of getting a HELOC or something like that on the second property. You can just kind of tie it all in together and get her done that way. That's
Right.
a big advantage. One of the big advantages, Kevin, that you guys bring to the table is avoiding a good chunk of the BS paperwork that the
Right.
big banks are looking for. So, bureaucracy, that's one thing you
Yeah.
help get rid of.
Yeah.
Speed is another thing you help with, is this can be done a lot faster than traditional banks. Flexibility as well. So what are some of the, let's look at it slightly differently. What are some of the mistakes people make when they're looking for a private money lender or hard money lender? What are some of the mistakes you see people make when they're trying to get you to lend them money?
That's such a great question. And I actually just released a book. It just came out on Amazon several months ago about this because there's a lot of,
What's the book? What's the book called?
it's Fund Your Flip.
Love it.
Fund Your Flip. You can go to fundyourflip.com and it's going to show you, take you a link right to the Amazon page. But look, there's a lot to it because it isn't regulated, Dave. Each individual private lender is going to have their own sets of guidelines, their own processes, their own everything.
Yeah.
Some of the bigger mistakes that I've seen is going to a fly by night. I hate to use that term, but I don't know how else to describe it. But a private lender that isn't really institutionalized quite yet, or maybe just getting going, and they're not properly allocating funds, let's say. So a lot of times the private lenders will loan the money to buy it and fix it. So if you're doing a fix and flip, you could borrow the purchase and the construction. Now,
Mhm.
there could be some limitations there, but if you're borrowing construction money from a private lender, let's just make sure that they actually have the money. Because
That'd be
when you,
nice. Yeah.
I know it's funny. I'm laughing too, because obviously we don't have that issue, but I get calls frequently like, hey, my private lender isn't funding my draw. And it's
Now,
because they
now,
don't.
so there's again, you got the professional lenders used to be called hard money
Yeah.
lenders, and individuals that had some extra cash that every once in a while loaned it to real estate investors would be, in my books, private lenders.
Yeah,
So,
exactly.
yeah, let's just kind of let's stick with the hard money lender just so I can keep my head around it a little bit better. Yeah, and what you're saying is some of these guys just they'll make the loan, but they don't have the cash to actually the capital to actually back it up. That's
Yeah.
what I'm hearing.
So for us, let's say we're going to do let's just keep it real simple. Let's say we're going to do a $200,000 loan and there's 50,000 in construction. I mean,
Got it.
that's really
Yeah.
simple numbers. So we would take that 50,000 and it would be all disclosed on the settlement sheet. But what we do is we move that money into our trust account. Now you
Mm.
got to make sure it's a trust account like a title company would have, or an attorney for retainers. That way it's protected from creditors. So that's number one. You want to make sure it's a trust account. So we move it into our trust account and then we release that in draws as the construction is done. Well, what some lenders have done and what I've heard is
Mhm.
that they'll take a $200,000 loan with $150,000 construction and they'll only fund the 150. So that's the first advance, right? And
Mhm.
then the 50, they don't do anything with it. And then their hope is that they have that liquidity when the borrower is actually ready for the draw, and they'll just
So they're hoping that they'll fill up the funds by the time they're needed in order
yes.
to get the loan to. Got it.
Yeah,
Got it.
maybe they
Got
have to wait for a loan to pay off, or they have something going on
it.
over
Yeah.
here that's going to free up some liquidity for them to fund those. And it's like this puzzle, or like this game of moving pieces. And so I would just I mean, that's the one that came to my mind when you asked me, but there's a lot of mistakes. I mean, another one is all the hidden fees that hard money and private money lenders
Yeah.
have. So, I mean, there's teaser rates. Everybody does it. So just an 8% or 9% rate. And that's underneath prime right now. Prime, as we're recording this, is 8.5. So
Mhm.
if you're getting an 8% promise from a private lender, that's almost too good to be true. So I would just want to peel back that onion a little bit and see
Mhm.
why or how are they able to offer that. And let's just make sure we're comparing an apple to an apple. So if somebody's giving you a
I'm
market rate,
suspecting there's some points that are going to be
well, of
included
course,
on that one.
yeah, of course there's points, but just the rate is what people are attracted to, right? So it
Yeah.
just sucks people in, and then they get into the deal. And it's like, oh wow, that's not what I was expecting. Now I have 2 points on the entrance, and I got 2 or 3 points to exit, and I got prepayment penalties, and I've got rate escalations, and all this other stuff that wasn't really disclosed as well as it could be. So I've
Yeah.
seen investors get themselves into trouble with that.
So I guess another good question would be, how can you vet a private money lender? Like if you put yourself in the shoes, obviously first choice would be have them talk to you. But let's say
Yeah.
it's somebody that, for example, we got a lot of Canadian listeners, they don't really have the option. So if they're trying to find a good hard money lender, private money lender, how can they?
Yeah, that's such a good question. And I wouldn't be able to help your listeners anyway, because the
Mm,
thing about hard money lenders is they're very geographically focused for the most part, because if you could focus in geographically, you could really protect the money. So we wouldn't lend in Canada, but I will tell you this. The book will tell you the answers, right? Fund your flip, but I don't want to just dodge the question here. How can you vet them?
yeah.
Well, definitely you want to look at the track record. How long have they been in business? Who's behind it? Let's dig into the people or person behind it. Reviews are huge. And
Mm,
then I would absolutely look for referrals and any kind of references. Referrals over references. If you can get referred to a lender, that's probably your best bet.
mhm.
But I would do some diligence on them.
Yeah, good advice. So let's switch the focus here, Kevin. You as the lender, what are some mistakes you see borrowers making when they're trying to get you to lend them money?
Yeah, see, the problem with investors is they're very optimistic. Okay. So I think
Yes, we are.
there's
Born
a couple of
optimists,
big
right?
mistakes.
Yeah.
One of them is just not understanding the numbers. So look, I teach classes and how to run through numbers on fix and flips. And I tell people like print off your formula page or your Mayo maximum allowable offer and use a pen, because here's the problem. You start using spreadsheets and pencils and things that
Mhm.
erase and change. Now you start saying, oh, it's not going to take me 2 months to do the rehab. I could actually get it done in 6 weeks. Well, I could get it sold in 2 weeks instead of 4. Oh, I'm going to be under budget, so I'm just going to lower my. And then all of a sudden, it looks like a super fantastic deal. And then you
Yeah.
get into it, and not only were you wrong on your estimates, but it's actually went the opposite way,
Hmm.
and now you're losing money, right? So I would say run your numbers, don't fudge and don't erase and don't try to massage. Stick with the numbers, take the emotion out of it. That would be one of the biggest mistakes. A second one is greed. Like investors want to do more than they could actually handle.
Hmm.
So I don't want anyone to lose money, Dave, but I tell you what, if you go out and do a deal and you lose a little bit of money, but you learn some tremendous lessons, that's a great foundation. And
Hmm.
if you have the stomach to keep going, then you're going to be probably pretty successful. If you go out there and just kill it, make a home run on your first one, and now you have this ego problem, and then you do 2 or 3 or 4 deals at a time, and then all of a sudden the whole house of cards fall. So I just gave you two, but those are probably,
The
and
two.
business divorce. I do see a lot of partnerships. Be very, very careful with partnerships.
Yeah.
But those two that I gave you would probably be the top two.
Yeah, for sure. So basically being overly optimistic and kind of
Yeah.
not even unconsciously fudging your numbers in an optimistic way, right? So again, I'm sure you've seen that a gazillion times. So you have to kind of slap people upside the head and say, "Hey, here's reality. Here's what reality is probably going to be, and it's quite a bit different than the sunny picture you painted." So yeah, that's one big challenge. And then just biting off way more than you can chew too fast, going too big too fast.
Yeah.
And then partnerships. Yeah.
Yeah, so I gave you three. The partnerships is interesting because you can't hit your potential without them. Like I think
Yeah.
partners are extremely important to do well in the business, and they're extremely dangerous. So do them and have caution. Make sure everything's in writing. Make sure you structure it correctly. Don't do a partnership with a pal just because you guys are pals. Like what roles and what value does each person add? Those are the types of things that are important when you're thinking through this.
Yeah, most definitely, Kevin. No, that is very, very good advice. Where are you going with your company over the next 12 to 24 months? What fun, exciting stuff? You got a book that just came out. That's
Yep.
exciting. What's coming down the pipeline for you?
Oh, Pine Financial is doing really, really well. So we're about to hit our 1 billion in originations. So it's taken me 16 years to get here, over 2,500 loans. We're over 20 or close to 2,600 now. But we're very close to
Congratulations.
1 billion.
Yeah.
So I think that might happen next month, Dave. So that's super exciting.
Yeah.
But we're a growing team. We have 19 on staff right now, and we have probably 4 hires coming. I think we're done for 24, but 25 we'll probably have 4 more hires. And the target is a little bit further out than you said. You said 1 to 2 years. We're probably looking about another 4, and we want to have a top line of 20 million. So pretty lofty goals, but there's a clear path to get there.
Oh, that's fantastic. So, Kevin, you mentioned that for a lot of private money lenders, hard money lenders, geography is super important.
Yes.
Who are you guys able to help? What's your sweet spot location wise, or sweet spots?
Yeah, so there's 2 sides of the business. I want to make sure this is clear. We have our private passive investors. So if you're looking for very steady, secure returns, first position liens,
Mhm.
I mean, you're not going to hit your, high returns like you would in a syndication. There's a place for that in your portfolio. But if you're looking for some consistency and something very boring, but is going to work, then the private debt side, which is what we're talking about here, is
Mhm.
a good way to add that to your portfolio. So for that, it's nationwide. US.
Mhm.
On the borrower side, that's where we're very geographically focused because that's
Got it.
where we're putting the money. So we're up and down the Front Range in Colorado. So think if you know Colorado, it's Fort Collins down to maybe Pueblo,
Mhm.
along I-25 there, and then we're in the Twin Cities. Those are our 2 primary markets. So a lot of people from Canada. I know Canada and the Twin Cities. There's a lot of relationship there.
Mhm.
And then DC and in Wisconsin.
Okay, interesting. Yeah, quite a broad
Yeah,
spectrum there.
there's a little story behind each one of those moves. It's very strategic.
I'm sure there is. Awesome, Kevin. So you got the book. If people want to get more of you and find out more, what should they do? Where should they go?
Yeah, I get questions a lot about the economy and how that's impacting my business and investors. So I wrote I wrote a special report comparing the 90s crash after the savings and loans fiasco compared to what we're going through now. There's a lot more similarities with high inflation, high rates to the 90s than there was to 2008 because people constantly compare everything to 2008, but it's not similar to 2008 at all.
Yeah.
In fact,
Yeah.
there's very little correlation. But 1990, if you go back to that recession, which also impacted real estate values, there is some similarity. So I wrote the report, giving that away for free at thepinereport.com. So that would be one way. Go to pinereport.com, download that. Otherwise, you want to reach out to me directly. It's pinefinancialgroup.com, or I will share my email. I still answer all of my own emails. It's kevin@pinefinancialgroup.com.
Awesome, Kevin. Well, thank you very much. And if they want the new book, Fund Your Flip, that's on Amazon as well, correct?
Yep. Go to fundyourflip.com, and that would be the best place to find it on Amazon. Or I'm sure you could just Google my name or
It'll show
something.
up.
Yeah.
Awesome. Well, thanks for your insights. It's been fun.
All right, Dave. Glad
All right,
to be
everybody,
here.
take
Thank you.
care, and we will see you on the next episode. Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewyou.com. Now at moneypartnerformula.com, we help real estate investors to create a process for predictably getting capital so they can do more deals without relying on hard money lenders or the banks. We do this by building them a private capital marketing system. Now, if you want help turning yourself into a big money capital attraction machine, then book a call with our team to see how we can help. Just visit moneypartnerformula.com to find out more. All right, take care, and we'll see you on the next interview.